Hey everybody, it's Gerwyn from Project Line. Today we're going to take a look at the NetSuite Intercompany transfer orders. Now this is a little bit different than our previous video, the NetSuite Intercompany sales orders and purchase orders. So what's the key difference, you ask? Well, with the intercompany sales orders and purchase orders, there's literally buying and selling between two subsidiaries. Maybe there's even a markup on the items that you're selling. So we're going to be affecting our intercompany revenues, intercompany cost of goods sold, GL accounts, and because there's an exchange of money, there is actually an effect of our intercompany accounts payables and accounts receivable GL accounts. Whereas with intercompany transfer orders, it's really much more simple. It's really just a simple exchange of inventory quantities and the respective item costs between company A and company B. So let's take a quick look at how NetSuite handles this. So we're going to go to transactions, inventory, and then we're going to go right here to enter intercompany transfer orders. So let's say, for example, we want to transfer some stock from our US subsidiary to our Canadian subsidiary. So we're going to say our to company is Canada and our from company is US 1. We'll also specify which location in Canada. We'll say Toronto, and our from location in the US will be Los Angeles. We can also put a memo in here, interco transfer from US 1 to Canada. We can also select this box here called use item cost as transfer cost. So it's really just going to transfer our item cost from company A to company B. Okay, so also down here we need to pick our item. So we're going to say this item here, and we're just going to transfer a quantity of 1. Okay, we can also specify, is there going to be a shipping cost? We'll just keep it simple. We'll say there's no shipping cost. I'll keep it at 0. Okay, and we'll just say save. So as you can see here, our intercompany transfer order has a status of pending fulfillment. So really there hasn't been an exchange of goods yet. We still have to fulfill the order, which means we need to pick, pack, and ship it. So let's go ahead and click on fulfill. Right, again, we're just saying a quantity of 1. We'll just say its status now is shipped, right? And we'll go ahead and save that. Now again, because we have fulfilled this item, right, it affects our accounting in the back end. So if we look at the GL impact, we can see that inventory stock has been credited, and now it's debited our inventory in transit GL account, right? So if we go back to our original transfer order, I want to show you the related items tab here. So you'll now see that there is a link to the item fulfillment record that we just created against this inventory transfer. So let's fast forward. Let's pretend our Canadian company has the goods now, so we need to receive it into our Canadian subsidiary. So we'll just click on receive, and again we're just going to receive that same item. There is an exchange rate here. So again, what's going to happen is NetSuite's going to do all of the accounting in the background for our intercompany transfer. We can take a look at that GL impact. And as you can see, there has been an exchange of inventory between our Canadian company and US company. It's affected our intercompany clearing accounts for set amounts. And if we go back and we go to that transfer order that we originally created, and we go back into our related documents tab, you will now see the two documents that are cross-referencing each other. Okay, so this is intercompany transfer orders in a nutshell. I hope you enjoyed this video, and we'll catch you on the next one. Thanks.